Hello, everyone. Welcome back to the RashInvestor.com's Daily Brief Recap. Today is Thursday. Man, we're just marching through this week. Can't believe how quickly it's gone. Just want to make sure YouTube's working. Today is Thursday. Man, we're just Thursdays, here we are, September 3rd. Usually I show my calendar. I'm not quite sure why it's not loading. I think I have to reboot my computer. But anyway, Thursday, September 3rd. Baby powder report day on TRI. So we had Julian come on and talk to the community about his various adventures in the markets. On balance, of course, I think obviously everybody in crypto is sort of taking a step back. Maybe licking their wounds a little bit. Unfortunately, this time of year is very typical of sort of fluffiness. Sadly, of course, this is exactly when the kids in crypto feel most optimistic. Our sort of trap kind of warnings from people like Mike Novogratz and stuff like that, I think we're fairly well received. I don't think anybody really who follows our channel or follows, best practices when it comes to trading was getting too caught there. Believe it or not, if you can just, hunt those W's, at least if the W fails, well, okay, fine, get the hell out. But you're not coming in and like chasing an up market and then the market just collapses and you're caught bag holding up top. Where you just can't get out, and maybe like 50% plus loss instantly. And if anything, that's the kind of thing that we really want to teach. Don't chase, don't chase, don't chase. Right? You've heard that 100 times from me. Before we get going in earnest with your report here, I'll do it at the beginning of the broadcast. You got 3 days left to enter the raffle that we have coming up here on Labor Day weekend. Basically, this Sunday's Broiler Chicken Show, we will raffle off a seat for the fall term. So if you are interested, put your name down, put your email address, and then that way you'll be in the draw and good to go. And then, of course, if you are interested, try to learn sort of the process. How does a professional actually run a business small business of trading? And consider joining our fall term. Now, with regard to you guys and your reports, what I do see is obviously, risk on assets are coming off dramatically here. It's interesting how we did have our little double top come in on oil, and oil really fell out of bed here earlier this morning. And, of course, we got a big old fat M now working in the corn, so that's not a good sign. In fact, actually, I even put out tweets. So often when I do these tweets, I just try to make the message as simple as possible. And the simple message I want to convey to the public here is, if you see M's in price, think of the market smiling at you, up, down, up, fail. It doesn't necessarily mean that the market's going to collapse like this. In this case, up, down, up, fail. We just ground along for a month or two, just driving everybody crazy. But it definitely should be just a simple message. Hey, do I really want to go and risk my hard-earned money right now in the face of that? We cheekily say that if you ever see the market smiling at you, it's getting ready to take your money. This could be like Mr. Hayes. We used to put out tweets about Arthur Hayes and his big-ass fucking smile and the stop runs and all that on MEX. Well, this is the same sort of thing. The market is trying to tell you a message. Are you going to listen? Well, that's up to you. So, that's kind of the backdrop that we're seeing, and considering the time of year. And then 2020, oh my goodness. I mean, everything is going absolutely emotionally haywire here. It's interesting. Through the daily brief, we had the conversation with Julian. He had a bunch of money sitting in T-bills, and, they're getting paid 1-2%. And then all of a sudden the Fed just says, interest rates, 0. So he's like, well, what the fuck do I do with my money? It's just sitting there. I like just having in T-bills and collecting interest. So in a weird sort of way, we can actually understand the logic of why risk assets went up as much as they did. I mean, where the hell else are you going to put your money? Put it in the bond market, get almost no interest, and you're locked in at really high prices, and the bond market could collapse, and then you're sitting on a massive capital loss. So to a certain degree, actually, I kind of understand the logic of why basically there is no alternative. Where are you going to put your money? Does that mean that this is a good investment idea? I don't think so. But I can definitely understand the emotional sort of knee-jerk response by the public. Also, too, remember, anytime the government goes in and guarantees the floor of the market, that big stimulus package that was passed in here, that's basically a green light that the market can move back up. So I suppose that makes sense to a certain degree as well. Very much like we had that conversation about the gold market when it hit bot objectives and chaos levels and stuff up top. It's not necessarily like, oh, this is a sell, a short it, go into the, it's going to go into the floor. In this case, you can see we had another week or so of further grinding higher, but you can see, gee whiz, look where the market's coming back to, right back down to the goddamn chaos level. So they can take these kind of late fluffy moves in markets back very, very quickly. And that's exactly what they're doing here. I wonder whether we're doing this kind of consolidation. So, we're really going to see what the hell the market's got, the pros are thinking here. And actually, I'm a little surprised, to be honest with you, that this is happening before the Labor Day weekend. Because what this means to me is that, the summer fluffy nonsense, if the market was still up top here, the pros would come back after their holiday weekend and they'd be like, sell this thing, man, it's way overbought. But if they knock the market back down, maybe back into key support, maybe against old highs, that kind of thing, then the pros are going to come back and they're going to go, well, actually this stuff's all in buying windows. I got to buy. So I do find it fascinating that they've done this ahead of that holiday weekend. I would not be surprised at all if at some point over the next 6-8 months we're trading back down into this sort of 50% rule level. The question ultimately here is, does the top have to come in all the way up top here? Maybe we have to work up there, or is this the top? I doubt it. This smells. It's a little fishy, and of course the top, so we should expect it to be tested at some point. And I got this sneaky suspicion that this is the kind of thing that they're going to do here. And we got one more push up top into sort of that, maybe even into like October, and then we get ready for some dump. I don't know. Tough to say. Maybe this is the top. Anyway. I know, Brian, trade your setups. Is there a trade for me to do here? No. But it is interesting also, too, how our breadth indicator was rolling over. And we often see, we did have some strength coming in. And interestingly enough, kind of totally off topic here today, considering how nasty the stock market is today, getting its ass kicked, I do find it fascinating that, names that we actually bought on our screeners are actually moving up on the day. Like, what the fuck's going on there? So this is that kind of thing where, there are some parts of the market that are washed out and they're starting to work higher. And interestingly enough, what usually happens at the very end of these moves, and I gave it a challenge to the site members, you can do this yourself. Often what ends up happening is just at the very end of these moves, the big indexes either have, like in this case, big blow off top to the upside, or in this case, the indexes are the last thing that drop, or indices, as somebody corrected me the other day. So I wonder whether to sort of mark this pivot coming out of the summer holiday to get ready for some sort of push up out of Labor Day weekend. Are the indexes finally now starting to break? Even though the broader market, you can see, like our little small cap versus large cap. I mean, it already broke way over here. That's back on the 20th. So that's like literally 2 weeks ago. So now just the indexes are finally starting to catch up to the rest of the market. Once this is done, and things like Tesla are washed out, and Apple and Google and Amazon and all that crap. And all that short-term overboughtness is done. Get ready. We probably could have, like I said, I'm thinking that September is probably going to look like this, right? Lots of back and forth in here. You can see that the US dollar is trying desperately to hold on to this recent low. I still kind of think this is trappy. But definitely you look at things like the euro, massive bearish divergences. At some point, this thing's going to break. And at some point, this US dollar is going to do things like 38.2s and 50% retracements. It's coming. But I just don't like the fact that we've made a new low here recently. Wicks and tails like to be eaten. I get the feeling that, this obviously is horizontal support and resistance in there. So I get the feeling that they're trying to push it up into these levels. Then, maybe following the holiday, they bid stocks back up. This thing comes back down. We get our big war at the candle body low level. Wicks and tails like to be eaten. Then we're going to find out whether this thing's for real. Do we just keep cranking lower, or do we put in some sort of W, and that's the bottom, and we start working our way higher? So considering this is Thursday of this holiday week, there's probably a bunch of position squaring today. Keep in mind options expiry tomorrow, so they usually say that most of the business is done Thursday. Then the options expiry happens. It's very quiet. Did notice things like the VIX index were jumping up violently. So probably some options related activity around all of this. But the bottom line here is I think we're still very early in this process of deciding if the US dollar has actually bottomed. And of course, we got these chaos levels still floating down here. So I don't think the fireworks is done yet. But if we look at the sort of anti-US dollar, of course, the gold, again, really good testament on why we have to be patient and disciplined, waiting for these setups to develop. We had been talking recently about potential new sort of bullish bot setups to take us higher, and you can see that clearly that's now a pretty significant level. That is your double bottom if these lows hold. But I got to tell you, man, I was looking at the gold and silver market, just looking at the futures themselves. This looks extremely dangerous. And I even put out like, uh-oh, SpaghettiOs kind of things, because it's like, oh boy. But here's that silver chart. So you see where the 50% rule is. You see the empire up top here. You see the fact that this was a reload zone short level. I kind of warned you guys in the public. Silver people are evil. You can see what they just did in here. So the trade looks like it's been accepted. We watched this fire first thing this morning. Market rallied back up. You can see it made a little bit of a wick there. And then, if we probably look at that on like an hourly chart, there is that trend line. So, oh boy, all hell's breaking loose. There is the fractal confirmation, empire top. You can see they tried desperately to hold that, put in a bottom, and then just slam them. So I get the sneaky suspicion this trade is on. It's on like Donkey Kong. Having said that, I suppose the really slick traders are probably going to be looking for some sort of counter trend rally back. Look how against that trend line, a totally awesome trade would be to hunt like a nice M right in there and hit that. But this is like day trader stuff. So point here is that off the higher time frames, we've done some nasty technical damage here. So I got to cool my jets in a market like this. Absolutely. And interesting how, okay, we'll leave it at that for now. All right, put that away. So, nothing to do on the gold market right now, just big hurry up and wait. And my hunch is, I don't know whether today's low took out these lows, I bet it did. No, it didn't, beg your pardon. So, one low, two lows, this is still holding in here. If it can just don't break down here and then turn back up, then away we go. But I don't think it's just there yet. And, remember we talked about that US dollar. I still think there's a little bit of back and forth here. So, If anything, it's probably encouraging to see the stock market finally, it's dangerous when the stock market just keeps going like that because you don't know what the hell the catalyst that's going to break it. So if anything, it's kind of good that, hey, we're at least releasing some of the pressure here. As I talked to you guys recently, we did have another new M-top come in on the crude, so we got this fun paper trade short working. You can see at one point this morning we were looking, woohoo! Counter trend rally, and it was back and forth. Probably a rally back against these highs should be expected, but we'll see how we go there. But another sort of risk off kind of vote there. So risk off, risk off, risk off. I don't know what is the gold acting as a risk asset or a risk off asset. The problem is gold's so expensive right now. It's like Bitcoin. I mean, these assets are expensive. Did notice the bonds are moving up nicely. We kind of did this head and shoulders forecast for you recently. Still think that's pretty valid. So you can see that there's the, actually why don't we put it there, right? So I still think we're going to work our way back, especially if the stock market is really weak here. We rally back up into these levels. Then we come back down, test these levels, and then is this inverted head and shoulders? Up we go, or do we out and keep going lower? So right now, nothing for me to do here, but that does explain what's going on from a risk-on, risk-off perspective. Clearly, it looks to me like money is coming out of the stock market and running into the bond market, which makes sense. Ebb and flow, ebb and flow. Efficient frontier, asset allocation. Yeah, it's pretty commonplace. As we sort of said, take a risk in the market. Our breadth indicator was putting in, but we don't really have a buy signal. It's putting in some uppy, but no real buy signal yet. And, our little proxy on the junior market is market-based, Russell 2000 versus the Dow, same sort of thing. Tried to put in a little bit of a bottom, but the junior stocks, they're just not catching a bid. And, of course, the risk is coming out of the market now. So that analysis doesn't really surprise me. But I got to say, there are some fun little stocks out there. I like the cruise and leisure stocks and the fact that they're up on the day. Wow, the stock market is doing this? Fantastic. What happens when the stock market gets happy? This thing's going to go apeshit. So totally pleased with that. And then here's an idea Kevin had in our recent club meeting, TRISOFs. And everybody should look at that chart and go, well, that's just a bot. I mean, so what? I can find bots. What's so special about Kevin? What's so special about Kevin is he shows up day in, day out, and runs his small business of trading. You do that, you hunt bots, and the cool part about this one is there's a beautiful key reversal. So excellent candle chart patterns. You should see what's going on here. There's nothing really out of the ordinary. 1 low, 2 lows, 3 lows, 4 lows. Gee whiz, beautiful trend line breakouts. Woohoo! So, the irony of it all is that there are names out there. I find it fascinating, even in crypto. There's one name that I'm super jazzed about recently, and the goddamn thing just keeps going up. I can't get in. Oh, I already got a bunch, but I wanted more, and they just left me behind. Boo. As for crypto in particular, obviously we've been humming and hawing about how this crazy summer market was going to end. It looks to me, now I don't know whether this is really usable or not, but we have a nice trading range in here. Did a pretty normal 200% extension of that. Looks like we've carved out a pretty well-defined head and shoulders. We often talk about wicks and tails like to be eaten, and I think that's exactly what happened here this morning. They just ate a bunch of tail. Also too, we had an old site OG who sent me this trend line, boom, 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 about 6-8 months ago. I gotta say, this is, I think, the predominant trend line here acting right now. So you can see the beautiful fractal right off that level. So clearly that's a monster resistance line going forward. We had kind of mused about whether this would resolve to the upside, trend continuation, or M out and resolve to the downside, and I guess we just got our vote, didn't we, folks? So I'm thinking, if you think market structure or market symmetry, All this is just a replication of this price action just flipped in reverse. And it's quite shocking how the market actually does that, eh? Isn't that incredible? So I kind of think we're in kind of like maybe this period right in here. And of course, coming back from the Labor Day weekend, look out. So hopefully, hope, we all, right, can get maybe nice little counter trend rallies back against this resistance level into reload short zones, maybe against down trend lines, to go and buy some puts or, that kind of stuff for the winter meltdown. If shit just hits the fan and this thing falls apart, I don't think that's the case, but if it is the case, then next sort of key support for me is down around $9,000. And what I see here is 12 and change, 10 and change. So probably the odds are, I think parking garage, we're probably going to bottom at like 8 and change, right? So there's 12,500, 10,500. You can see right now, probably the next repricing, if we have to panic dump, is like 8,500. And 38.2s off the entire range, or against original market structure bottoms, all that kind of talk. Of course, the big conversation right now is Ethereum. And I think yesterday we sort of talked about how there was lots of anecdotal evidence that this thing was going parabolic, crypto kitties, all that kind of talk. Nice M. Actually, Julian had pointed out that this M top here, chaos level, actually painted a level into 409 there. And if we do reload zones off the original range, you can see Mountain Man 78.6. This is the POC. This is the original market structure bottom. Where's your W? Well, it turns out all they did was they just brought price right back down to the original W. When price broke yesterday and I did this commentary for you, I just, I think I did this for sight people. I just drew these sort of pivots that I was thinking. Looks like we dead cat bounced into 38.2. Great lesson of why you need to respect that. Then we rolled over and we've actually broken the new lows. We smashed through these lows. So that, you can see, even for the community, I said, nope, new bottom there. So had the market held this trend line, my expectation was we work our way back up into there. But that's now off the table. So now what we have to do is draw our fib down and now wait for the next 38.2 test. And notice we've got this uptrend line, we got this downtrend line. It looks like we have some sort of horizontal support and resistance line in here. I guess that's off that old high. So really I would be also too, you can see that is the top of value. For the market to actually break above this, we need to see some serious buying come in here. I don't know whether that's going to happen, folks. But I definitely don't like the idea of shorting here. This is a reload zone. If anything, what I would prefer to see in lower time frame players are some divergences. You might hunt longs against these. That's fine. But I guess what I would love to see is us work our way up into 38.2, back off a bit, right, consolidate, and then blast off up into here. And thinking that sort of we're heading into the holiday weekend, they've taken the fluff out of the market. Kind of what I was saying earlier, the crypto kitties, they're all fucked. So now when the pros come back, I don't know whether we can do this, but when the pros come back, we might actually find there might actually be some buy setups that are forming here. The breadth is cleaned out, the indexes are done, and we get ready for another move back up top. So stay tuned. I mean, as trade locations go, I don't have a problem hunting longs against these lows. Obviously, we're very early in this. I'd like to see some market structure, but at least now take comfort that they've taken the fluff out of the market. And the technicians that go, holy crap, this is so overbought, it's got disaster written all over it, those guys are like, okay, phew, they've taken all that away, phew, now at least maybe we can get back to hunting setups. And here's the kick in the pants. If you actually are not interested in Ethereum and CryptoKitties and DeFi and all that kind of stuff that they're doing there, there are crypto names that are actually doing pretty well. I mean, obviously the shit perp is heavily weighted towards Ethereum and that universe, so be careful there. But look at this crazy Ubic. I mean, it looks like the overwhelming sell pressure is slowing the bull down. But it's fascinating about this Ubic because it's such a good lesson in technical sort of how the universe works. I mean, you could argue that this 50% level is long overdue to get traded to. And considering this is a pretty good quality project, it's actually surprising that this thing isn't higher. So that really needs to be traded to. And then, of course, we put in these beautiful W's, so we get chaos levels. And I get the impression this market has no choice. It is going to literally get sucked into this level. So where's that magnet tool? There it is. It's almost like, the market is just being drawn to this level. It's quite remarkable to watch this stuff happen. I actually need to pop a little bit above here to get my next double off. So come on, Alex. Give me a nice blast off through here. But isn't that interesting how even, and there are a number of different names. This just happens to be one of them. If you're involved in the fluff, then you might have gotten hurt. But there are parts of the crypto market that aren't really that interested right now in that part of the market. And they're still relatively strong. I mean, can you justify coming in on the buy side here? No. But take it a little bit higher. I'll let you have some more, Alex. Merry Christmas. Anyway, interesting commentary about market state right now. You can see the greater majority of this space is very, very weak following that. I mean, you got to make damn sure to pay yourself when these things pop up, right? But I did find it interesting that this Ubic is just bucking the overall trend. So with that said, I don't know whether I've given you anything really new to chew on here. A lot of this is just sort of reiteration of a lot of stuff that we've talked about recently, that there were lots of warning signs that, hey, gee whiz, this is getting awfully nosebleedy, and now they're finally starting to clean this stuff up. So, okay, everybody, I think I'll leave the rant at that for today. Sure hope you got some value out of all that. Have yourself an awesome, excellent, super duper rest of your day. All the best, and bye for now.